there's a certain amount of sociopathy. I think that attracts capital, attracts attention to have the confidence to say, "Oh, I can raise $4 billion for this." Like you gotta be thinking a little bit outside of what would be considered normal. Yeah, yeah, to have that kind of confidence.
But I think there's really two groups of people that I'll place. I think on one court, I think you're exactly right. The sociopaths who, from day one, have been looking and scheming. And then I think there's the second part of people who they don't go in with the intent of a lie, but one lie becomes another. And as these things compound, they change. I think that could be what SBF had. The fact that both regulatory framework and corporate controls allows him to do it, that's really the problem.
Opinions expressed by podcast participants are solely their own opinion and do not reflect the opinion of DigOp or their respective organizations. This podcast is for informational purposes only and should not be relied upon for tax, investment, or legal related decisions. Podcast participants may hold positions in tokens or assets discussed over the course of this conversation. Now, with that out of the way, let's jump in. Yeah, Kevin, thanks for joining us for this episode of Convince Me. I don't know if I told you that's what we call this podcast, but we call it Convince Me. So
I
this
love
is
it.
an interrogation. Um, no, I'm partially kidding, but like the motivation for Dalton and I starting this podcast was, um, now right now the market's ripping, but when we started doing this, I guess whatever, like a few months ago, whatever it was, we were like, man, this whole market is just like meme coins and like various sources. It's just a bunch of speculation. Let's like chat with people that are building things that at least we think are more meaningful than the memes and this sort of thing. So that was our motivation. But let me do some quick intros on our side just for folks listening. So my name is Philip Moran. I'm co-founder and CEO at Digital Opportunities Group, and I'm joined today with Dalton Cole, my co-founder at Digital Opportunities Group, as well as Kevin Hoang, founder and CEO at EQ Exchange. Kevin, I'm not gonna. I want you to give I'm going to let you give your intro. I think you're doing some, really interesting stuff, and especially folks who, are aware of the craziness. Like, who's not aware of the blowups and everything that occurred with FTX and the different, lenders and whatnot. But you're here to kind of, do something different, and hopefully fix that problem. So I'll let you take it away.
Sure. I'll give you a quick life intro that bleeds really well into kind of how I started EQ Exchange. So started my career as a software engineer, was probably an okay engineer at best and loved the business side of things. So found my way into product management, joined the crazy startup where I was head of product, and fast forward a couple of years, I was advising for a lot of startups. I joined Google, worked on the Google for Startups program, which I realized that I love startups more than a big company, so left to kind of do my own consultancy to advise for startups for a while. So I love that. And then I advised for one startup called Newton. They were one of the largest crypto exchanges in Canada. They were regulated in Canada and the US. And I joined at a really interesting time in December 2022, which FTX happened in November 22. So I was brought in to kind of figure out we had a failed expansion to the US, spent a boatload of money and had 150-ish customers. Um, and also post FTX, how do we kind of repair that trust with customers? So I was brought in to advise for the startup to figure that out. And interestingly enough, in the year that I was there, and we left after in November of the next year, nothing's really changed. And I was really interested where, FTX, pretty crazy what happened in FTX and failure of epic proportions. But for some reason, everyone moved on. SBF went to jail. And because he went to jail, no one ever in the history will ever do this again. And I was like, no, I don't think so. So looking forward, I was just like, I didn't think it was kind of acceptable to kind of leave it at that. And as I talked to more people about it, everyone kind of gave up. I was like, well, what can you do? And I was like, okay, so My product manager hat put on, I wanted to see if there's something that I could do. So I tried to think what was the opposite of FTX, so where they have no financial statements and records, for a company that's $1 billion company. We're going to actually be the first company in the world to do full transparency. And by full transparency, uh, we want to do real-time financial statements and release it to the public in real time. So you think of any public company, they compile a quarterly statement. Um, we will be generating in real time a financial statement, and be disclosing it to the public in real time, which has never been happened. And I think plays some really interesting parts in how I think the future investment could be, if the SEC allows us to ever go public. So that's really the baseline of the company, a company built on trust and transparency, hopefully to win back people and to really bring a little bit of honesty back into crypto. And the second part of our mission is really to make crypto easier to use. Me with my product hat on, I always think about crypto in many ways is a solution looking for a problem. I know many people be mad at me for saying that, but I think it's an important step. And early steps, early stages of technology adoption, you got to build, things that you might not be solving for problems, and people will build on top of that, right? But really, to get mass adoption, you really need to make it easy for people to use. And I think crypto is too hard for the everyday consumer. We have technology evangelists who will be willing to use really hard technologies because they want to be the first, right? They're willing to suffer, as in like a beta with bugs, so they can be the first to market. But really, when you get to the early majority, which is the majority of people, they won't want to suffer any pains, and they want to just have technology work for them, right? So how do we get the next group of people, which is the next billion users, to crypto? So those are the two missions we're trying to solve: trust and transparency, and making crypto a little bit easier to use.
That makes a lot of sense. I think, as Phil mentioned, that's kind of the core of why we wanted, or at least part of that was the core of why we want to do kind of the Convince Me podcast, is because we also viewed this as a solution looking for a problem in a lot of cases. And we looked around. There's a lot of people building really cool stuff, especially for me from like the tech side. I'm like, wow, this is a really, this is an ingenious solution. This is a cool way to put things together. But then when it comes to actually combining that with something that improves someone's life, I think we've still got a little bit of an air gap there between what the tech is doing and what people need. At least as a naive U.S. citizen that doesn't see third world country problems, not exposed to like hyperinflation and things like that. That's where I sit. Yeah, so super interesting.
And when you talk about these, or I guess like going back to like FTX imploding, and then just saying, well, like what reason would you actually have to think that this would be over? Like, why would it be? Why would this be the last case of this sort of thing happening? That definitely, like, frankly, that resonates a lot with myself as operating in this space, and interacting with loads of different counterparties.
Right.
I've been pretty vocal about this, that there are, I think there are still a few bad actors out there. And, it's like, it's unfortunate, like the way marketplaces work, or maybe it's like whatever you want to say, but there's a sense in which bad actors somehow have the ability to attract capital, at least in the short term. It's weird, at least in the short term.
I think it's
Yeah.
similar to like politicians, like your hedge fund managers, there's a certain amount of sociopathy, I think, that attracts capital, attracts attention, drives you to have those conversations, to have the confidence to say, oh, I can raise $4 billion for this. Like you gotta be thinking a little bit outside
Yeah.
of what would be considered normal. Yeah, yeah.
Sure.
To have that kind of confidence, I think.
But I think there's really two groups of people that I'll place, and I've done a little bit of research on this and just watching a lot of stuff on it. I think on one court, I think you're exactly right. The sociopaths who, from day one, have been looking and scheming and building it. And actually, what's that Netflix documentary where those guys with the credit cards, they I think intentionally from day one made up everything, right?
Right. Right.
And then I think there's the second part of people who I've heard a couple of different stories on this where, they don't go in with the intent of a lie, but one lie becomes another, and as these things compound, they change the dynamics, and they're forced to make a bigger lie and so forth. And I think that could be what SBF had, where some losses start, and then they start using client funds to fund that, hoping that they could get away with it if the market starts ripping. Which, by the way, I think Delta and I were talking about it. If he didn't send out those tweets, right, with CV, maybe he would have been okay today, and
Yeah.
you know, because the market would have saved him, and he made billions on Solana, right? So I think it's really interesting that maybe not everyone goes into it with that mindset, but the fact that the both regulatory framework and corporate controls allows him to do it, that's really the problem, right?
Yeah.
And I think there needs to be some type of regulations is not necessarily, I think, the end all be all, but I think it's a very strong start.
Right.
Yeah,
He was
that
very close to getting away with it, I think.
sure. Yeah, I mean that's something that this is my opinion, and I guess I'm a little I guess frankly I'm a little skittish to kind of like really say what I think, but it's just like in my opinion, like I really think like regulation is going to be so far behind the ball because there are material nuances as to like how this asset class operates. And so like for example, with Aaron Kaplan at Prometheum, who was kind of all over the news for him testifying in front of Congress and everything, and we chatted with Aaron recently, and they are this SPBD, special purpose broker dealer. It's like the U.S. regulatory framework for trading crypto, basically for being like an entity who can allow trading of crypto. And even reading through those regs, which I will say, my opinion, reading those regs, I actually think there's got to be somebody in the SEC who is actually like someone that the industry can work with, because I think that those regs, like there's a lot of work that needs to be done to them, but like they weren't. At least it was somebody who was like trying. That was my opinion when I read them. But there were some like reading through those regs. This is an example. They state with custody that the like special purpose broker dealer should maintain full control of assets at all points in time. And like that statement to me is really interesting because in crypto, like we have technology in crypto that like
Yep.
allows you to distribute the policy management around owning assets, which I think can actually like improve the security for users. But I don't think that like it's not that hard to understand. You just kind of got to like use these products to see like what that ends up meaning in practice, and how that can make people better off and safer. But that's just one example. I think they're going to be kind of like behind the eight ball as this industry
Mhm.
continues moving. We don't really see the technology necessarily slowing down in terms of like the new
Mhm.
stuff that can be generated.
And I think you're 100% right. And I think the regulators are trying, but they will never be caught up with where the market is. And that's just think of security as a parallel example, right? Like corporate security, encryption, all of that stuff. The policy writers for security encryption, NIST, and all of these organizations are not the same regulators who regulate it, right? Because these are scientists who are, PhDs who are at the forefront of security and encryption. These guys write the guidelines for, both all of the agencies around the world, right? And that's what we need to have market participants and people actively engage in the process to really provide good discourse. But on the regulation side, we're trying to figure out, well, is it a security? Is it a property, which is I think UK has defined it as property. Is it a commodity, et cetera, right? And we're still figuring out what our vision is for the product while the whole industry is already moving so fast, right? So I think just as security, black hat hackers will always be ahead. You have the white hat hackers who are somewhat behind, and you have everybody else who's fast following these two groups of people. In digital assets, it's exactly the same thing. The industry is moving far, far ahead. We as, or not we, but regulators are always catch up, and that's okay, right? But do you want to be figuring out how do you want to regulate it, or do you want to actually work with market participants to figure out, well, what is the best way to regulate? And as you said, having a crypto entity custody their own coins, I think, is not necessarily the best regulation, even though I think Hong Kong has adopted the same thing. But in every other regulated jurisdiction, it's a third party approved custodian, right? So all of these different things were there's no homogeneous way to look at it, and I think that that's the problem.
Yeah, and even with like, there's like a couple things. I guess first thing I'll say is like, even with these regulators, like something that I'm concerned about is that as regulators put in place some frameworks, it's going to give people a false sense of security, and then they'll engage with some products that might have regulatory approval, but it's actually like because they're behind, there's just this dynamic that you outlined, people get involved in something that is
Mhm.
unsafe, and they thought they were safe because it was quote regulated or had some kind of stamp of approval. And well,
I want to
yeah,
bring up something
okay,
that
let
you
me.
said.
Yeah,
Yeah. It's really, really interesting of that, and we're actually seeing it right now. This changing of perception. So, as you know, post FTX, everyone did go to kind of a proof of reserve system, a Merkle tree or a ZK proof that you can figure out that your money is somewhere in the chain of custody,
yeah, at
right?
least in
Um,
regard to like the spot assets that are on the exchange.
right.
Yeah,
And I think that's a huge positive move that the majority of the big companies are doing that. I really commend the industry moving towards that route. Binance, very big, doing it every 6 months. OKX, one of the forefront, doing it every month, which is incredible. By the way, it's not easy to do. Um, but I'll give you two facts. One is FTX completely changed in 11 days. So a month comparison proof of reserve still is not enough. And two is actually the accounting firm that uh, does Binance's proof of reserve does not want to continue because it creates a false sense of security. Call it a 6 to 12 month audit of the proof of reserves that it does not say what they think it's saying, right? And I think it's the exact
Right.
same thing that you're talking about in the regulator side is um, a proof of reserve once a year or 6 months does not mean that today that company is solvent or has that chain of custody, and they don't want to imply that impression when they stamp it as well with
Right.
the proof of reserve. So I think that's exactly what you're saying on the regulator side is we can do all of these things to put our stamp of approval on it, but it does not still guarantee that it's a solid product.
So when you
and
say
then oh, I'm sorry. Go ahead, Dalton.
I was just going to clarify. So when you say that EQ will have real-time financial statements, that goes beyond proof of reserve. That's actually the corporate financial
Everything.
statement, everything, cash flows,
Yeah.
everything.
Well,
Okay,
Everything, and that's the
got it.
purpose. And it's not easy, it's incredibly hard, and the reason it's hard is you're looking at kind of every transaction, being able to process it in real time or close to real time as possible, and being able to generate some financial statements with some degree of accuracy, and then post it to the public. So all things that are incredibly hard, but I am confident that we can do it because we're a greenfield company, which actually is a big benefit.
Right.
Going from a brownfield organization who has tons of manual processes, that might be a little bit harder. But as a technologist, I don't think it's impossible, and that's kind of why we're trying to do it. here because everyone says it's hard because they're a big company, whatever it is. For a company that's starting from scratch doing it, is it doable? I definitely think it is. And through all of the conversations that I've had with accountants and technical teams, I think it's definitely very challenging, but definitely doable. And I'm really excited about the implications that will happen if you can trade on a company's live financials.
Yeah. So sorry, Phil, I keep cutting you off, but
Go ahead. Go ahead.
so where was I going to go with this? Does crypto make this any easier? Or, I mean, so much of that operational side is not, I mean, it's not real crypto on, I mean, other than the proof of reserves, like your transactions,
Hmm.
it's bank account transactions, it's probably, net 30 invoices from vendors. Like you've got a lot of
Yep.
stuff going on. So does crypto make a meaningful impact on that simplicity? And it does. Okay. Okay. Got it.
Absolutely.
Got it.
So
Okay.
crypto, I will luckily say I chose the right industry to start with because crypto, everything settles immediately or close to
Right.
immediate, T plus zero. Whereas on the TradFi world, just went to T plus one. And the second part is revenue recognition is also in real time, right? So
Mhm.
that's the biggest key. So if you're a CPG type company, call it Pepsi or any other company, you can't recognize revenue until it actually hits your supplier's
Right.
shelves. Well, maybe when they receive inventory, right?
Okay.
So there is a big time lag between when you produce your products and then when you recognize revenue. And obviously with each industry, that's different. Thankfully, with crypto, especially with the crypto exchange, when someone actually executes a trade, we can recognize that revenue in real time in terms of what is our spread or what is our fees for that product.
Mhm.
And that's immediate for us, right?
When-
So the revenue coming in, all those transactions are actually, let's call it, the majority of transactions in a crypto exchange. However, where the complexity lies is actually not that because the majority of that is on chain.
Right.
The majority of the people I talk to, they're like, yes, everything in crypto is on chain. So what are you doing that's so novel? But in reality, the way a crypto exchange works is the majority of transactions are actually off chain and behind the scenes, right? The reason why a crypto exchange or centralized crypto exchange is so important in the context of the community for both traditional and Web3 is that we're not sending a transaction every single time.
Right.
Otherwise, we would pay gas fees, right? The reason why a centralized exchange is so much cheaper to work with is that we don't necessarily settle that trade immediately with whoever our counterparties are, right? Whether it's another person that you're transacting with, or another liquidity provider, market maker, etc. So if you buy a Bitcoin, we will make that kind of swap between wallets on paper, right? And maybe at the end of the day, with a market maker or with another person, ends up being even. Nothing really changes, right? It's just on paper that crypto assets and dollars move. But as we can see, this is where all of the fraud can happen because, well, you can just move certain things here. We can create a new customer group called, slush funds, whatever it is, et cetera, right? So this is where all of the stuff that, you know, has opportunity to make some really changes where it could affect the materiality of the company. So that's what we're hoping to solve is that by doing it in real time, you can't do that, right? Because you have to build so much checks and balances
Right.
to make the whole system reconcile in real time. If you change something here, everything will be out of balance. Now you're going to have to change code to reflect the validation of that. And if you're changing code, everything else is going to be off balance, right? So building in real time is incredibly difficult. So changing something that is validating in real time is even harder. And that's really the purpose of why what they're going to get to is a system that you can't really mess with. That's the end goal.
Gotcha.
Do you, when you think about like having those financials disclosed in real time, I guess one, that'll be a super valuable tech stack once that's put together and it's rolling. But I mean, two, like, do you think about market participants, watching that, watching the financials, and like, would there be any kind of like attacks that would open it, being kind of like malicious, whatever?
Um, I am definitely scared of it for sure. I don't know how it's going to play out. Like I said, no one's ever really done this. So on one side, on the kind of transactional side, a lot of exchanges do this, right? So Binance, you can kind of see their volume, whatever. They just have APIs to pull a lot of their stats and how they're doing. So, volumes and stuff. So that part is there. The part that's not there, yes, is seeing all of your financials and all of your assets and stuff like that. I think it definitely opens up us to, in a public market, sure, corporate takeover and all of that stuff. Incredible volatility from day to day changes, right? But at the same time, I think it's just an interesting outlook when we get there as a public company. And I think that journey to get there is also really interesting on whether or not the SEC will allow us to go public. Is it still material if everybody in the world gets this access to the same information at once? I don't know. Um, but it definitely is a lot of concerns on how our journey will progress going to public. But I think as a private company, I think we should be okay. We can easily ride out volatility as a private company. But as a consumer, we also need to be much more conservative as a company because you know how whispers can create a bank run. Well, actually, you can see exactly how much runway we have. So if we have who's going to put in money to a crypto exchange that has 1 month of runway, right? Um, we definitely need to be much more careful and intentional about how we operate. But as a financial institution and as a consumer, I actually do want my banks and financial institutions to be a little bit more conservative with my money because I don't actually make any more money when they make more money. I pay you $8 a month to hold my money, right? So I think there is a really interesting balance that we can get to when we do this, at least as a financial institution.
You'd said previously that you picked a good industry to start with. Is this process something you would be interested in taking outside of crypto exchanges and having real-time financial statements in other industries?
Absolutely. I definitely it's in the plans for us. And for us, when we started, we wanted to think about if you were an actual legitimate crypto project that was building good work,
Hmm.
right? And not trying to create a rug pull, how would you prove yourself? Because everyone else is saying that they're not a rug pull.
Right.
That was really the initial line of thinking. And as we expanded the line of thinking, well, what other industries could benefit from this? Nonprofits, charities would be a first, I think, really important one. New market entrance into financial institutions would be another interesting one. So I think there's a lot of use cases for it.
The U.S. government.
However, as a consumer, I think that we would love for them to have it, but
Right.
um, that will never happen. Um, so I think there's definitely a lot of portable industries that could use it, but I think they run exactly the same risk that Phil mentioned, right? Like there's a lot of you're exposing a lot, and you have to be very intentional with of the way you operate your company.
Yeah, I
But
think that
hopefully, it
nonprofit
could be
one
a
is interesting.
differentiator.
Yeah,
Yeah,
I think
absolutely.
yeah, because you already have your annual 1099 or not 1099s, your I forgot what the nonprofit form is. It gets filed that has your statements of everything, where the cash came from. That would be interesting to see real time for donors to see where that cash is going. But it's not like dirty balance sheets or dirty financials is exclusive to crypto either. I mean, there have been plenty of public companies that had bad auditors that were, fudging the books, and you got your Enrons and your other ones that hopefully some regulations have removed some of that risk. But it is, I could see the benefit of real time financials across, you know, most industries. There's not too many that benefit from hiding financials, at least for publicly traded companies. I think that's the only reason that we have quarterly reports is because that's kind of the pace at which they could be produced without being a huge burden to the business.
And to point on that too, really the biggest challenge for us is operating on anything that touches traditional finance, because even today, the majority of payment rails and interactions with financial institutions are still FTP, all of that stuff, all legacy processes which are not going anywhere anytime soon. So for the majority of the stuff that we see as real big challenges to our journey to real time, which is like call it per second real time, it will always be limited by the counterparties that we work with, the banks, et cetera, right? If they're sending us information in T+1, well, that's the best that we're going to actually have that information. Um, that's really the legacy world that we're going to need. Or that's most challenging. So one of the banks, as an example, that we worked with, had no APIs at all. So really, for us to work with them in a real-time setting, it would be really some manual process to kind of bring in those transactions, because there's no other way than logging into the bank's website, right? So those are like limitations that we need to work around as we go to our journey. Ideally, the majority of banks have open banking, but I was just at Money 2020. They said that open banking is coming in the next 5, 10 years. They said that 10 years ago, by the way. So we will see.
So what as I'm listening to you talk about this, Kevin, what I'm thinking is like, how are you going to give assurances to the users that like even that real time data that you're providing is not fudged, right? Or heck, it could just be a fat finger, as you mentioned, like these
Yes.
manual entries, right?
So that's a really interesting one. I've been thinking deeply about this from pretty much day one. So there'll be two sides. One will be hopefully more than periodic audits of our financial statements through reputable auditing firms. Now, there's no such thing as a real-time audit, right? There'll never be a company that will stamp that. But even at our points of time, call it on midnight on the last day of the month, right? An auditor can go in and check if everything matches exactly at that point of time. So the more point of time audits that we will have, the better. That we at least are, consistent at that point in time, right? The second piece that we're working and thinking about, and I'm looking to provide our users is the ability for the users to that all of their so maybe go back a little bit. When you have not a lot of users in your platform, they can actually go in and kind of check a few transactions. They would most likely, put in $100. Okay, see the AUM go up by $100, and then they'll do a trade for $50, and then they'll see, okay, yeah, actually the trade went up to $50. So I think our early users are definitely going to be doing that, and we're going to highly encourage that for users who want to get maybe 10,000, 100,000, a million users. Well, numbers are just going up and down, right? So how do we show that our feed is live? And one of the things we're hoping to do is be able to generate a code that you can check against our system, similar to how you do the proof of reserve. The Merkle tree generates a code that you can see if your balance is on that chain of custody, right? We're hoping to do the same thing where you can kind of generate a code that is short time, where you can go and check and see, these are all of the transactions obfuscated of your user, obviously, but your whole chain of transactions. If you trade a transaction right now, you would see that increment and
Like the
you're
final
able to.
balance is known and is attested to. Yeah.
Exactly, but it's not given exactly your name, Phil, exactly, right? And we would
Yeah.
generate that for call it a 24-hour period, and then it disappears, and you can regenerate and share with your friends, but it's only a very short time. So it's proving that the whole system is working as it should be. And to be fair, there is still a larger, a user can say that, I can see my stuff. That's great, but I don't know if that adds up to the full picture and all that stuff. And I agree with them. That is actually the right way to think about it. But I don't know how else I'll get there as well. I think between the point of time audits and showing that the system is actually working in real time, I don't know what else to show users. Hopefully, we'll get there and be able to have more solutions. But I think the other part that I want to say is there's much easier ways to scam people than to
Sure.
build
Yeah.
some of the hardest things of like building a centralized exchange, building a regulated centralized exchange, and doing something that no one else has ever done, which is this real time, what you call it, transparent system that discloses in real time. If I really wanted to just create a rug pull, I'll probably just create a meme coin. That's
Right.
probably a much easier way
Yeah.
to go.
Sure. Um, Yeah, I mean, especially once you start talking about, I think like it becomes challenging once you start talking about like derivatives as well, right? Well, I guess like with a derivative, like like say you're using like futures, you really just have to look
Hmm.
at the net open interest, and then
Yeah,
if you're posting the balances, then you kind of just true up the net open interest against the balances to kind of like get an
correct.
idea of credit risk in that case, right? Because I think that's one challenge with that. A lot of people in crypto uh but probably realize by now, like if you're involved in the asset class, you get it when it comes to
Yes.
derivatives now. But it's like every derivative is effectively a credit instrument relative to that, like that venue that you're trading at, right?
And the hard part about that, and this is something that we have not thought of and need to think about if we get into all or when we get into all of those things is mark to market, right? That's obviously a really big one of is there a value to market in real time? And what is the implications of doing that? That's something that I haven't grasped my head around. And when you're talking about derivatives and futures and all these things, you cannot discount that, right? And that's something that I haven't sunk my teeth into. Probably need a good think on it, but a real time mark to market, that's something that is even more ambitious than I'm willing to tackle on at this time. But
Hmm.
I think that would be really, really interesting because the way we mark to market actually creates a lot of loopholes in hedge funds and stuff like that. And a lot of accounting, if you don't hold an asset for more than 30 days, you don't have to mark to market, right? So it creates a lot of opportunities, but I think that's going to be one of the hardest things that we will tackle down that road. Down that road.
You're saying you don't have to mark to market in terms, like as if you're not holding that at like your whenever your admin strikes the
Correct.
book,
So if you
basically. Yeah.
exactly you if you bought it on the first of the month,
Yeah.
and it went down like 80% by Tuesday, if you sell it before 30 days, you don't have to market that at the loss, even if you sold it for the price that you paid for, right? Even though the value is down and you got it off your hands, you didn't
Yeah.
have to mark to market the 80% drop in actual value,
Yeah. Yeah. I mean,
right?
you'd have a realized event in that case, though, right? Like it would show up on the,
Correct.
yeah, there'd be um, a new dollar amount effectively at the end. But yeah, I hear you. I mean, there's definitely um, there. I mean, it's definitely possible to do like shenanigans, right? When it comes to accounting,
Oh,
it's
it's not more than possible. It definitely did happen in 2008 and
oh,
others
like
where
yeah. Oh man, yeah. Um, geez, yeah, absolutely. When I mean, when was Madoff? Right? That was uh,
I think yeah, I mean, I think that's fraud. That's just straight fraud.
yeah, true. Fair, fair. Yeah, so you mean like in the context of the way they were marking the like MBS and stuff like that in '08?
Correct.
Yeah.
They were holding MBSs and trading MBSs, and passing it around and not marking it down, even though they knew the value was zero, as long as they didn't hold it on their books for longer than 30 days.
I see. I see. Yeah, I think my knowledge of the accounting shenanigans that went on that time are entirely informed by the Big Short movie.
Right.
You know.
Yes.
Yeah.
Margin Call is another really good movie, by the way.
Yeah, margin call
Around
too.
there.
Margin
Yeah.
Call. Yeah,
One of
it's
my
a good one.
favorite.
Yeah. Yeah, margin calls, it's a little too serious for me. It's like if we're going to be talking about like the implosion of the economy, it's like I need some humor,
Need
a
some
little more
Margot
humor thrown
Robbie.
in there. Yeah.
Yeah, yeah, that was I mean, even now, like surely there's accounting shenanigans going on in modern
Oh, we
public
know it
companies.
happens.
Yeah,
We know
yeah,
it. Like
uh,
you see
When
all
it
the
when it's
fines that come
compiled,
up with
right?
the banks. Yeah.
yeah, yeah.
When it's compiled, you can paint the picture as you want it, and you can, and especially, uh, if you have a losing firm or, amongst JVs as well, if you have a JV with another firm, and depending on your ownership structure, you might not have to write it down on your books if that company fails, right? So things like that, right? Like again, I don't think I can solve these problems. This is not what
Right.
the market to market, I think, is a really tough thing for us to solve, and
Yeah.
doing that in real time, I'm not sure if that makes sense. But in terms of accounting shenanigans, I can tell you that there's a lot up there.
Yeah.
Hopefully, with this, we're hoping to solve the one, which is just instead of compiling, generating is incredibly difficult, and generating with confidence is incredibly difficult, where it's not feasible to fake something. And this goes back to the premise of Bitcoin as well, right? And the reason why Bitcoin works is it's actually not feasible for someone to change the code of Bitcoin. You need to have 51% consensus, which is half of the power of the world at one point, right?
Mhm.
So it's not that Bitcoin can't be changed or the code can't um, be maliciously, somehow changed to with a bad actor. It's just it's not feasible because at some point in time, right, when you have enough data or you have enough miners, to get 51% of the power of the world to change the direction of Bitcoin at this point is not feasible. You
Right.
need more money than China has. So that's what we're hoping to build also with this real-time accounting system is at some point it becomes infeasible for you to change something to change a zero or whatever it is because now you have to change the validators and you have to change all of these things, but then all the stuff previously doesn't add up, right? So that's what we're hoping to do.
So just to make sure I'm clear here, so like the actual posting of these like transactions that go into creating that real time financials, you're considering using crypto rails to deliver that ultimately?
So we're partnering with a company called Knox Networks, who is building payment interoperable infrastructure between both digital assets and yeah, and they built a strong platform that enables us to manage essentially the money supply across all of our organizations, entities, and stuff like that, and be able to monitor that in real time. So really, that's kind of the basis of how we built a lot of. So we're co-building with them on this platform on top of their infrastructure and wallet system to deliver that real time. It's essentially an internal blockchain because the transactions on a crypto exchange um, will. On a singular crypto exchange would probably be more than the throughput of Solana, for example, right? Call it that the number of transactions that Binance is probably doing is in the hundreds of millions or tens of millions per second, right? You can't run that on a public blockchain, for example.
Right. Right.
So we're using a private blockchain infrastructure that enables TPS of up to a million TPS per second, which is kind of the speed that we need to settle transactions with every single user on a incredible scale basis. So the long answer to your question is yes, we are using it on the blockchain. It's just not a public blockchain that we're building infrastructure on.
So based off of your the value you put in trust and transparency, what are your thoughts on Tether and the way they're doing their attestations? Obviously, it's very
I
important to an exchange. Like
yeah,
you're gonna be sitting on a ton of it. Uh,
100%. And so this going back to this is counterparty risk, right?
right.
Can we and at what point do we consider Tether cash equivalents?
Right.
And I think that's going to be the real interesting question. Can you put a US dollar, an actual US dollar, and can you put a USDT side by side? And from an accounting perspective, call that cash equivalents, right? And I don't think you can,
Right.
especially if it's not backed one to one. And technically, it's not cash equivalents. And on the USDT side, they are almost more or less a hedge fund.
Right.
Smaller scale, but tons of money there.
Right.
So I think that's really interesting on where that space is going to go. I totally get why Tether is doing it, because
They
they're,
got a ton of cash.
yeah, $6 billion a year for 100
Yeah.
employees, right? Not too bad
Right.
of a
Not bad
number.
at all.
Um, and when you have that much cash sitting around, you can't just do much with it. You just can't. You're not going to earn 6% putting into the bank, right?
Right.
This is actually the same problem that SVB had. Is they got a huge influx of money through the ZERP era, and VCs throwing money left and right, and all of this money was just sitting in a cash account. When you have 20 something billion in cash, it's not like regular people. You can just get some interest rates on it. You have to buy treasuries. Now, did you have to buy all of those 10-year treasuries? Probably not. Maybe some risk management and probably spread some of that out would have been nice. But when you have that much cash, it's just there's not any place to park it other than treasuries at scale. So, from one point, I do get that, you do want to make some money on it and you want to diversify a little bit, but within risk parameters, right? Because at the end of the day, they're paying you to store customer assets. So this is what I was going back to is for a company like that, I see that there's opportunities to make money, but within reason. And this is the profit and motive incentive of a financial institution that goes against the incentives of a user who just wants you to hold their money, right? How do we kind of align those incentives in a way? And I think that what we're doing is hopefully to have the users self-regulate us, where our risk profile is aligned with what we subscribe to the user, right? We can be more conservative as a company. Maybe, instead of 20, 30% of US dollars that we take in, to be invested in, startups or whatever, treasuries, etc., it would be 5% or less, right? Even though we're more conservative, but because we're more transparent as a company, there is now this alignment of incentives for users to want to trust a conservative bank company. And that's what we're hoping for, is to have the users regulate us and in many ways believe in us and invest in us.
But even with what you're talking about there, like kind of going out the risk spectrum, whatever percent of that might be with the balance sheet, you're not talking. That's like company balance sheet assets, right? Like
Correct.
that's
Yeah,
not user assets, which was like that was the problem
correct.
before, right? Was user assets were being consumed for that. Yeah,
But the same thing is with Tether is technically user
yeah,
assets as well, right?
yeah.
So Tether, at one point had one-to-one backing with a US dollar, right? Now it's changed to a one-to-one backing with cash equivalents. Again, I think I get the journey to move to that, and I think at that scale and number, it does make sense. But from a risk management perspective, how do you ensure that you are, keeping customers' funds safe? Because at the end of the day, that is the job.
Yeah, and I mean at this point, Tether's just so ingrained in the infrastructure. I mean, like on the international markets, international crypto markets, like effectively, like all the derivatives volume is settled in Tether. You know, basically every pair, if it's like a quote fiat pair, it's settled. It's versus Tether. Um, it's really only like U.S. domestic exchanges where it's like against fiat or USDC, and even then, there's still Tether pairs. It's still a
Yeah.
meaningful portion.
And
It's kind of weird to think that what I've seen is that like in DeFi actually USDC is more kind of like the collateral in DeFi, which is kind of weird when you think about it. Like USDC is kind
which
of the
is, yeah,
more
exactly, because
buttoned up
Sicko is
version.
the
Yeah.
the very button up version of USDT in many ways. And yeah, I think that's interesting. But you know, at the end of the day, I think the more proper companies moving, I think there's a big alliance that got together to make another coin with recently. I can't remember what the name is. But the more of these stable coins that are out there that give us, competition, so there's just not one monopoly, will actually breed much better outcomes for the industry rather than just all in one. And when you have all that money in one company, you just have so much power that you just take bigger risks because or use so much money incoming that you can manage any ups and downs and changes, right? So I
Yeah.
think more
I,
market participants is better.
yeah. I think it creates like some challenges from like just like with exchanges, right? I think it's like because it's like if you're going to have these competing versions, then it's like okay, you kind of are you going to have multiple pairs that settle against each of these individually, or do you start to treat these, the same, and then you have sort of like it's XYZ token versus USD, but that USD is actually settling across like this basket. And then it's like, okay, then does the user then have to think about, okay, well, I'm trading this pair, but then what I'm really exposed to is this basket over here. And then what does that mean? Because people have experimented with that in the past. In like 2022, for example, I think there were a few. There's one that I know of, one exchange who was working on doing that kind of thing, and they're not doing that anymore. Now it's just settling against either Tether or USDC. But that's annoying to trade against like all these different pairs.
And to complicate that even further, now you got the wrapper tokens of Coinbase and stuff, which they've wrapped Bitcoin into their own Coinbase BTC, right? So you have another flavor on top that only trades on Bitcoin on Coinbase to add to the complexity. So yes, I think it's getting more complicated, just like the number of proliferation of streaming apps, Netflix and all of that stuff. I wish there was only one Netflix, but now there's like seven of them. Um,
And now we're paying more
in the
money for all the
end,
different apps, right? Yeah, it's a cost for the consumer in the end.
agreed. But I think just like the apps, I think what I see is it will eventually be a consolidation, right? You weed out the bad guys who don't have the right infrastructure, or weight will probably die out or get consolidated eventually
Yeah,
back. We're not there yet with the streaming apps, but we're seeing a lot of them die, thankfully. Who really, so I worked in that industry a little bit as well. So I'm happy to see them die because every studio just wanted to make a new app to
Right.
get money and they didn't know how to do it and they just threw money at the problem. Now they're losing billions of dollars. So when a lot of thoughtless, development projects start, they end up very quickly seeing that to build something of Netflix scale takes dedication and years of innovation. And because your studio has a lot of money, you just can't, throw money to do it. I think we're seeing exactly that in the stablecoin industry, where there's a few market participants that are really truly trying to do good work, and then there's a few guys that want to, get into it. They can maybe capture a little bit of market space, but really, at the end of the day, they'll probably get consolidated.
There's not
that
really a
that's
good way to
a
build a moat in the stablecoin space unless you have like an exclusive partnership with EQ Exchange where you're only paired against this particular stable. Like with Netflix, you got they're the only ones with the Mike Tyson Jake Paul fight, right? So they've got some proprietary content there. Same with like Disney and like if my daughter wants to watch zombies on Disney, like I got to get Disney. But with
Yeah.
stable coins, like you've just got these like dollar equivalents on chain, and there's no real advantage to one over the other unless you get to like the yield generating space, which
Mhm.
which is strange because USDC, USDT, the two largest ones, don't pass on the yield. So it's looking for ways where they can carve out niches and build their own moats outside of exchange partnerships or like DEX partnerships. I'm not sure where you actually generate build those walls up. So it could just be like constant fluctuations of who's going to be running it based off incentives.
that one, Dalton. When you just mentioned like USDT, USDC, you don't get yield, but it's like you end up bearing all the underlying counterparty risk of
Risk.
their bank relationships or whatever cash equivalents they're holding. And it's funny because it's like I think this is going back to what we said at the very beginning, where it's like the way regulators, it's like challenging for them to navigate because, it's like regulators have made it challenging to get your hands on the cash equivalent, like the ones that would pass on most of the yield to you.
Right.
But it's like, but with the stables, it's like you get all the risk of the cash equivalent without the yield, but then you can't get the thing that would actually make sense when bearing that risk. And even when you think about some of these other cash equivalent things like USDE, Athena's token, right, where they're basically just like a giant structured product wrapping up the basis trade. They're sort of, I mean, I guess that's quite different. That really is like a structured product at the end of the day. And I think it does make sense to create products like that, as long as the underlying users do understand what they're getting involved with. But I mean, I think that's like a really interesting challenge with this asset class is the way that it's like, it's by nature super open, where like these pretty sophisticated products where people otherwise wouldn't be able to get exposure to them. Now it's like, most people can, with the exception of US based people, right? That's obviously a challenge, but.
And I think that's, due part to kind of the vision of crypto in these countries. So I came from working from regulated space in both Canada and US, some of the two toughest markets in the world for financial products, and especially crypto, right? And to me, there is no vision here, not in a bad way, but at what they want to regulate crypto as. And because of that ambiguous nature, we regulate it weird. Weird is the only way I can say it, right? Um, and especially in Canada, and won't say too much on it, but um, there is this underlying problem of, yeah, exactly, is it a security? Is it, a commodity? Is it what is it? And we're regulating it as a security. Great, fine, not great, but they also make us do things that are the security dealer brokers don't have to do, which is like, you know, why, if you want to regulate us as security, then you're making us do things that dealer brokers typically don't have to do, right? So I think that whole ambiguous nature at the highest level of governments is the problem of, once they figure out what it is, that's really the most important step, because otherwise we're going to just get haphazard regulations that doesn't make sense in many ways, or makes sense but also is varying between countries. So I think you brought it up early on, where in the US, I think with the is it SV, what was it?
SPBD, special purpose broker dealer.
SPDD, yeah. That you have to be your own custodian. So in most countries in the world, you should not be your own custodian. You actually have to have an approved custodian, a third-party custodian, right? So when Coinbase is coming to Canada, Coinbase being one of the biggest custodians in the world, I believe that they can't be their own custodian, right? Which I think makes sense. And then another country, US now, and Hong Kong, for example, they require you to be your own custodian, full service, right? So I think these different varying natures of regulations, I think, are really interesting to see how and why they kind of mapped out. But at the end of the day, I think, we're just going to be just doing, really ad hoc thing unless we really figure out what the end state vision for how they want to regulate it. And then that's what we're hoping to see before we come back to the North American market.
Yeah, that's fascinating. I didn't realize that there were, I mean, it's like, I don't know why, but I never just kind of like boxed up like, oh yeah, over here in these jurisdictions, you got to have full control, i.e. US, Hong Kong, and then you got a region like Canada where they have what seems like you said, I think that's pretty darn reasonable to like have another entity, facilitating custody.
And
that
most
makes
countries have that.
Yeah. But just the mess that makes for navigating this asset class, the absolute
Absolutely.
mess. Okay, now I've got to ask, what do you think with the election in the U.S., Trump getting elected? What do you think that bodes for the future of crypto?
That I don't know. I think my honest opinion is I think either of the president elected, the outcome of crypto will probably end up being the same. I don't think either of them have a very strong unifying vision of what crypto is. So I think in the short term, we will benefit from having probably more favorable regulations for crypto with Trump. But I think, like I kind of mentioned, the long-term vision for how you navigate digital assets as a whole is really important to bringing stability to an organization or a country. Um, I love what EK did with, I'm not saying that it is the property, by the way, and it should be regulated as such, but they have fully said that crypto assets are a property and they will regulate it as such. Fantastic. Everyone knows exactly what's going on there. No problem, right? EU came out with Mika, pretty strong stance on what crypto is. Great, right? They kind of have a fairly strong vision of what they want to regulate crypto as. US and Canada still kind of in the middle of, is this still a security? Well, stable coins, what is stable coins, etc. And as I go, do a lot of work in Southeast Asia and the Middle East, especially in UAE, they have a very clear vision of how they want to regulate it. As they came out with regulations for RWA, Singapore is very progressive, if not extremely strict on crypto regulations. So these create opportunities for a company like myself to be clear of how to operate in that country, right? Whereas the U.S. took a very strong stance against crypto by enforcement via litigation, which is the worst way to probably do it, right? So yeah, I think the outcome is still the same, as in the end state vision is probably not there. I don't see it. I don't see a coherent version in either of the two candidates. They probably just backed crypto because hopefully they get some votes from it, as most politicians. But I haven't seen a clear, articulate vision of what crypto is or will be regulated as with either candidates. So I think long term, we're probably still at the same place.
I I mean, I think to at least rhetorically, Trump has been pretty vocal about supporting it, right? Like he showed up at Bitcoin Nashville and talked about the reserve. The market likes it. The market likes it. But yeah, I mean, I think it's even with the politicians, they're still, or with these with president elects. It's not like we get away from the problems that we talked about before, where it's just like the regulators are kind of going to be one step behind. And I hope what that means for the future is that it's like they they don't let that make them like so afraid that they just stamp down on all just
Correct.
anyone trying to do anything innovative and new, you know, um, which has happened in the U.S.
And I think the viewpoint is very strong, that it's going to be very bullish for crypto going forward in the US for sure. Like there's no doubt that I think there's a change, and that's really what the market is feeding into right now. That it will not be an anti-crypto country anymore, which I would say that it's pretty anti-crypto up to date, right? Litigation, enforcement through litigation is as aggressive as you can get in regulatory framework. So moving away from that, hopefully, I think that already opens up a lot of doors to discourse on how, with market participants, of how we can regulate crypto, right? That's what we're looking for. That's what everyone is looking for is, hey, just, let us send out your request for comments. We will tell you how we think, and actively participate with, the market participants on what we see it as. And you can come up with your own opinion, of course, but let us have a conversation. Whereas, oh, we don't like what you're doing, we're just going to sue you. Right. And, for big companies like Coinbase, sure, they can deal with that. But for small companies like myself, we would get destroyed by that.
Right.
So that's why we wouldn't operate in the US until we have more certainty on it. But I think things are definitely looking really strong.
Dalton, you got any other questions?
I guess just based off what you said, where will you be operating to start?
So we're really excited about this one. We're working directly with the government of Barbados to set up our global entity. We, I think we have, within our executive team, we have a lot of ties to the nation. It's not a tax-free nation, and it has been crypto neutral for many instances. And I think with the level of transparency that we're operating and the way that we're approaching crypto, I think resonates really well with them. And obviously, they're very, or most governments are very scared of anything post FTX. FTX got a lot of liberties that no other company will ever get anymore from the Bermuda government. Um, that will never happen again, I think, for any other country, just because of that. So we're coming in there with, hey, look, we see what's had happened, but we're looking to do something completely different and work with you to really change the perception of crypto, and especially starting with your own country. And we're hoping to bring the same message to other regulatory bodies as well. My dream and vision is that it's not just getting users to buy in, which I think is the ultimate end goal, but getting regulators to buy in as well, right? For us to go into a regulatory body and they know us and they're like, you know what, we would love to work with you. We would love to accelerate your application or whatever it is. And a lot of these applications takes 12 to 16 months, if not more. If we can get there faster, or they want to work with us, or they want to invite us, that is the ultimate pipe dream. So we do intend, and I do intend to go into all of the regulatory countries because I think that is validation of really the concept that we're building, right? We're building a completely transparent crypto exchange. Everything that we do is exposed. You see exactly how it is. You want, information, we will provide it. And this will be something that is going to be divisive with our user base, because in Web3, people want anonymity. But I think we need to take a stand in this line in the sand of where we stand. And it's that we want to be the most trusted the most trusted entry point to crypto. That's the vision, right? And to do that, it can't be with anonymous users and no KYC, no AML. I think there's a clear place for that in DeFi, and the use cases I think to me are important, and the DeFi space is I think important to crypto overall. But that's not the problem that we're solving for. I'm solving for the problem of, my mom who has no idea how to use crypto and wants to get into it, wants to use or buy crypto from someone she trusts, but she doesn't trust going to Craigslist and finding a person online. And you know how they say you have to be scammed once to get into crypto.
Mm-hmm.
Not very good. Opening statement of getting a new user into crypto, right? So how
Right.
can, a new user who wants to get into crypto who has no friends who are in it be able to approach an organization they trust, right? And in the US and Canada, we have a lot of those organizations regulated by very tough regimes, in SEC, OSC, and Zero, et cetera. But call it around the world in unregulated countries, this problem is very hard,
I
right?
see.
So that's hopefully what we're looking to solve for. Which is very clearly different from the DeFi space, what they're looking to solve for.
Got it. Very cool.
That was going to be my next question was what your thoughts were on DeFi. So you covered that one. But when you're saying anonymized users, you're not saying that like the identity of the users would be posted as you're posting like real time financials
Yeah,
and this kind
absolutely
of
not.
yeah, yeah,
Absolutely
yeah,
not.
yeah.
So when I would say we want to give the fidelity of information that is pertinent to the health and well-being of our company. So think about a quarterly statement, right? You don't get employee salaries on that quarterly statement. That what is the value of providing an employee's salary in a quarterly statement to the health being of the company? And these are kind of the fidelity questions that we're looking to ask as we go through what we disclose to the public in terms of categories versus, the breakdown in terms of our revenue. I think for revenue, we would love to go as far as we can. What my end goal is to really show is how we're using the fees that we're collecting from you, right? And being really transparent and open about that, because I think one of our what you call it, favorite company, or my favorite company is recently the Mark Cuban's Cost Plus Drugs, which I really admire. Have you guys heard of Cost Plus Drugs?
I have not.
They're an awesome company that Mark started that provides the actual price that he pays for pharmaceutical drugs, so like cost of the drugs, and then he charges a flat 15% margin on top plus shipping. Right. So if your drugs cost $300, but he pays $25 for it, he adds 15% on
Wow.
$25 plus shipping, and he shows you the price of it. Right. This is my margin. This is what I pay from the factory. You pay this $300 through, whatever private healthcare that you have. You're paying $25 plus 15% plus $4.99 shipping. Right. And that transparency is winning customers over. So we'd love to do something exactly the same. With like, look, this is what realistically, this is what your fees are covering. It's salaries, it's servers, it's, whatever it is, right? And being really transparent as a whole company, not just the financial statements about how we operate, to show people that, hey, look, we're not trying to rip you off. We charge, a low spread-ish, not the lowest because we can't compete with Binance and their scale, but, Coinbase charges 3%. So what is the difference between what Coinbase charges, what we charge, right? Um, that's what I'd love to be able to offer to customers.
Very cool. Very cool. Well, I think that's a I think that's a really great place to end it, Kevin. Or unless you have some some parting comments, or Dalton, unless you have some other questions.
No more questions on my side. But well, actually, rolling out in the U.S., how would you like if you've got someone that's trying to decide? Like you had mentioned, you getting your mom into crypto. How would you get her to become an EQ customer as opposed to a Coinbase customer?
Well, I think the Coinbase experience and most crypto exchange experience is too hard still.
Okay.
Um, you know, the candlestick charts, all of these different words, all of these things thrown at the user initially, the onboarding experience, which we've researched over and over again with all of these different companies, it's still too hard.
Okay.
Crypto in general is way too hard. So think about how you create a cold storage wallet, right? You need to create a wallet with an air-gapped computer. Mom would be like, "What does an air-gapped computer
Right.
mean?"
Right.
Make sure that you write down this password. But didn't you tell me never to write passwords down on the paper? And make sure that you never lose it, because if you lose this piece of paper, you will lose all of your money and you never can get it back. Right? We're giving three contradictory things
Right.
that for most users is against what they know. Right? We keep telling our parents, don't write your passwords down on a piece of paper, blah blah blah. So the best, the way we use crypto is completely different than the way we interact with traditional finance. Right? Um, that creates a really interesting, how do we solve that dynamic? I don't have the full solution, but what I do see is the market, or sorry, the technology industry changing a lot to enable things that typically would be mutually exclusive, right? So, for example, both more secure and easier, right? These are two things that typically are not in the same sentence. But, we came out with this thing called passkeys, right? And passkeys, to my parents, is black magic.
Right.
It's more secure because it's actually encrypted with the device signature. So only one
Right.
device in the world can open it. But they look on the phone and it logs them in. They're like, oh my God, I don't feel safe with this, right? But to a typical user, a password is more secure for some reason. But no, passkeys actually is more secure. And it is easy to use because there's only one device that in the world that can unlock it,
Right.
right? So technology is coming out with a lot of these things that are actually more secure and easy to use. MPC being another one of them. And I think there's going to be progressively more of them that come down the line. User experience is also another big one. If you look at both Newton and Wealthsimple, we got our designer was from Wealthsimple. They're one of the largest crypto exchanges in Canada. They only have a buy and a sell button,
Mm.
right? And they've proved that you can create a really simple experience and get a lot of customers. We actually watch them go right through everybody just with the simplicity of their UI. So I think there is a strong point that there's more users not using crypto than there are users using crypto today,
Definitely. Right.
right? So if we can kind of tap into that next cohort of users with both simpler and more secure, which may not necessarily be here today, but I think we'll be on the cusp of a lot of these technologies coming in the future. That's a winning formula. Whereas all of these crypto exchanges are focused on adding new features and adding, more complex order types and all that stuff. Absolutely. But we will never compete with Binance on features, right? So for us, it's looking at a clear differentiator, which will be user experience, ease of use, being able to simplify the experience and be really, really trusted. Because at the end of the
Gotcha.
day, what I want is whether or not you use my platform to trade, you trust us enough to onboard and on-ramp with our platform, send it to Binance. That's
Gotcha.
right? Because our value prop is a very different value prop that I think us and Binance are actually, what you call it? We're not competing against the same markets.
Right.
So we're bringing in the new group of users. Maybe they go to Binance in the future. That's fine. But our vision is to be the most easy, trusted entry point to crypto, which I think works well with all of the other crypto exchanges.
Very cool. Yeah, that was it from me, Phil. I think that is a good place to wrap us up.
Yeah, that was excellent. Well, Kevin, thank you for making this time to jump on. I mean, this was really enlightening for me, and I enjoyed the conversation. I think other people are going to really enjoy it. Is there any contact info that you'd like to, conclude things with here?
Um, I think on our website, eq.exchange. So I was really happy with the domain name we got, eq.exchange. You can find all of our writing, all of my writing. I'm really looking to build this in public in terms of how we're doing this because, again, this hasn't been done before. People can reach me out on Twitter on there. I'm available to chat and get people's comments. I know that this is going to be a hard journey. I don't underestimate it. And hopefully, trying to build this in public and trying to get people to understand why we're building this and the process along the way, I think that's just as important as the end state.
Right.
I'm really excited to kind of get people's feedback into where we're going.
Amazing.
Wonderful.
Well, Kevin, thank you once again. All right, I'm
Thank you.
gonna
Absolutely.
click this.
So, Dalton, thank you.